Buyers have suddenly disappeared from the housing market. Prices are falling, inventory is rising, and yet nobody is buying. Normally, when prices drops, buyers rushes back to the market, but this time something different is happening. And the question everyone is asking quietly is, where did all the buyers go? Because when they come back, and they always do, the opportunity that we are seeing right now could disappear very quickly. So today we are breaking down exactly what's happening in the Surrey housing market right now and why this movement could be one of the most interesting turning point we have seen in the recent years. To understand what's happening in the market right now, we need to take a look at the three signals that are quietly shaping the market: pricing, inventory, and buyers' behavior. Let's start with the price. Across the Fraser Valley housing market, the benchmark home price have been reduced to $895,000. Now that number matters for one specific reason, because it puts the market under $900,000, a psychological price point that many buyers watch very closely. Prices have also softened roughly 8 to 10% compared to last year. And historically, when prices adjust like this so fast, buyers comes to market very quickly, but that is not happening this time. Because while the prices are adjusting, inventory is moving in the opposite direction. Active listing across the Fraser Valley have climbed to more than 7,700 homes for sale. That is 54% above the 10-year seasonal average. More home, more options, and more negotiating powers buyers have, yet buyers are still waiting on the sidelines, which begs the real question: is the market really pausing, or something bigger changing? There is one statistics that economists watch very closely to understand the housing market, and it's called sell to active listing ratio. It tells us something very simple: who has the more power in a housing market. In a typical housing market, this ratio sits between 12 to 20%. Above 20% means sellers have advantage, and below 12% means the market is shifting towards the buyers. And right now, the Fraser Valley have sell to active listing ratio at 10%, which tells us that we are firmly in a buyer's territory. That means buyers suddenly have leverage, they have negotiation power, they have option to compare, and they can take their time. And that's a very different environment than what the buyers have experienced in the recent years. But here is where the story gets interesting. Even though the buyers have suddenly leverage, most of them are still waiting on the sidelines. So the real question becomes, why the buyers are still waiting? And there are three major forces shaping buyers' behavior right now. The first is economic uncertainty. We have seen in the recent year, inflation has been higher. The cost of living, cost of grocery, transportation have increased significantly. Wages have not increased in the same way, and interest rates remain significantly higher compared to the ultra low that we had seen during and post pandemic. When the uncertainty increases, the buyer become cautious, they pause, they think, and they take their time. But the second force is even more powerful, which is psychology. When prices are rising quickly, buyers rush into the market because they fear on missing out. But when prices start adjusting, they pause, and the psychology flips. And suddenly buyers start asking questions like, will the prices will fall further? Should I wait for 6 months? Or is this the right time to buy? And ironically, that hesitation is often what caused the buyer to miss the most favorable window, because housing market rarely sends the signal that says this is the bottom. The third force is suppressed demand. Demand for housing doesn't disappear, it simply pauses. People still need houses, family grows, and people get relocated all the time, and investors are always watching the market, which means when the conditions improve, the demand could return faster than most people realize. And this is where the housing cycle become very interesting, because when buyer regain confidence, whether that's because of interest rate change, economic stability, or simply improved sentiment, the market can change very fast. Inventory that once looked abundant can begin shrinking quickly, competition start returning, and the negotiation power suddenly goes towards sellers. We have seen these patterns happen in the past cycles all the time. Periods of hesitation followed by surprisingly fast rebound in buyers' activity. And that's why many experienced buyer and long-term investor pay a very close attention to the market, especially in the period of transition like right now. Because transition periods are where the balance of power temporarily shifts, and those windows don't stay open for long. So where does the Surrey housing market go from here? And there are really two scenarios from here. If economic confidence improve and borrowing cost gets reduced, buyers' demand could return very quickly. And if that happens, today's higher inventory level could begin shrinking faster than most people realize. But if the economic pressure continues, particularly related to interest rate, unemployment rate, and high cost of living, the market could stay in this situation for long, and it may even drift further. Either way, what we are seeing right now represents something important: a transition phase in a housing cycle, a moment where the balance of power has shifted towards buyer, and historically these are the moments that shapes the market for the long term. But something interesting may already be happening. Early market data suggests buyers activity may be starting to move again, and if that trend continues, this quiet window in the market could close faster than people expect. And in the next video, we are going to look at the Fraser Valley number that were just released, because they reveal an early signal that the spring market might already be starting. And once you see the data, you will understand exactly where the Surrey housing market is going.